Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We got Rachel Dashiell with us in the chat. Say hello, Rachel. She is on the East Coast in that great state of South Carolina. And I'm also in the state of Utah where we're getting some rain, thank heavens, so we can go boating. We'd like to welcome all of you, Grace, Will, Kelly, GT, and many others. Welcome all. Hopefully you had a great weekend. And I taught yesterday in church. And so I teach almost every day here. And I always like to tell people in church, I'm going to try to offend you today, and I'm going to see how strong you are and see if you'll show up next week. They keep coming back. I don't know what's going on. Anyway, by the way, there's great people, out there, and that's what makes it fun. So just real quick, remember you can follow Rachel on X, formerly known as Twitter, at Rachel-CS. Also, there's my handle, James Boyd CS, CS for Charles Schwab. Follow us there. I'll also show you some pieces of information there. That's why I'm kind of saying that up front. Those are resources that you could use for educational purposes only. Now, also remember when we talk about our examples here, when we talk about technical indicators, we're talking about price and volume. Okay. Yeah, there's different ways to kind of gauge that price, right? And also volume. I want to talk about that volume here, in a couple examples right off the bat. When we talk about volume, we'll talk about it from a stock and option perspective. Also, remember when we talk about examples, the information I talk about here today is done for general informational purposes only. Also, if we bring up, say, some option examples, remember that options carry a high level of risk, not suitable for all investors. When we talk about, let's say, examples, we will do those on the Paper Money software application. And also when we talk about investing, remember, investing involves risk, including loss of principal. Now, there's risk everywhere, okay? By the way, there's also a risk if some doesn't set aside money for retirement and try to grow their money over time, right? That's a risk. So I'm saying get used to risk because it's everywhere, okay? So be aware of what that risk is and also always evaluating what's the potential gain versus the potential loss. Now, I want to kind of hop right in here real quick to the market. We'll talk about indexes first, and then we're going to talk about a technical indicator that I like to look at around this time. Since so many stocks have earnings this week, I want to kind of talk about one of the technical indicators we look at that really is looking at price with indicators and volatility. So let's go ahead and just take a quick look at this chart first. So if I look at this chart, we're just going to bring up the SPX. And if we look at the SPX, the one thing we got to say, now, if I were to ask you a quick question, like if I asked you to read this chart, how would you read it? Okay. Now, this is probably where we get some different answers. I heard someone this morning saying, hey, the market, after making brand new highs last week, today it doesn't know what it wants. That couldn't be the farthest thing from the truth, okay? You got to remember is last week we actually went up to some brand new highs. Actually, that brand new high was on Friday. And the biggest actually thing is when you go up to brand new highs, sometimes you want the price to consolidate and make a higher level of what? Support. Now remember, we've been talking about, people call it a bull flag, which has some retracement from the prior high. I've coined the term bull flat. Bull flat kind of being where the price runs up and the price kind of goes more sideways. Now, some people like that actually set up stronger than a bull flag, or it runs up and then pulls back. There's many of those. If you look at the S&P, they'll run to the upside, and I know everyone's going to tell you the RSI is at the high, the CCI is at the high, all that. Okay, look, they did not say that when the RSI, the CCI was at the bottom either. These people only pick one side. Okay, our job is to read the market. Okay, the emotions, we put them in a little Ziploc bag and we don't let them out. Okay, when you look at the price action, we're reading actually. So first off, we like to look at this. You got a 20-day, you got a 10-day moving average. Those lines, if we look at those right here, they're still green. Okay, now the one thing we kind of made mention is last week is you did see a shorter term moving average cross over to the downside. How long did it last? It only lasted a day. Now, I think if there's anything that I've pressed over and over and over again, is looking for short, shallow pullbacks in terms of duration and percentage, right? So if we look at these pullbacks, 1 day pullback, popped, 2 day pullback, pop, 1 day pullback, pop to the upside, still got momentum, okay? We haven't fallen down for 3 days. So someone could actually say, hey, the market looks toppy. Market's not showing that. When I say market, I'm talking about the S&P 500. I'm telling you, be very careful who you listen to, okay? The good thing is you as the listener, you can listen to them for a while, whoever they are or her, and then see over time how right they are. That's very important, okay? Now, if we take a look at the NASDAQ, okay? The NASDAQ, which had underperformed, fired right back to the upside. You're also going to see that the deepest pull down in terms of days that we've actually had, in terms of duration of time, is 2 days. Okay. Now, Friday was actually the brand new high. And you'll actually see that if you look at the semiconductors, I think it was GT mentioned in the chat, after 20 days, these are technically still green candles because they close higher than the previous day. They're red candles on mine because we closed lower than the open. But if you look at this is the first time in 20 trading days, a month, where the price is lower than the previous day. Gosh, it sure makes you think that if someone couldn't benefit from a 20-day bulldozing rally to the upside, sure kind of makes you wonder, like, how long would the trends have to be to benefit? Okay. Now, I know many of you rode some of those trends in that space or in that group. I'm not talking to you. Okay. Talking to the people out there that maybe were not riding that. Right now, if we take also look at the Russell, the small caps, same as the S&P, kind of consolidation. Remember, the patterns that we've been really talking about is, right, cup and handles, V patterns, U patterns, all continuation. And of the three, for example, of the four, that is kind of like lagged a little bit more, but not horribly, is really the Dow Jones itself. Okay, large cap multinational stocks. Now, if we looked at just real quick the VIX, these were the lines that we drew from before when we had that VIX discussion, that hearty discussion one day when kind of said, where do we think the VIX is going to be? We kind of said, look, large percentage of the time is probably going to be between about 16 and 20-ish, okay? So far, we're kind of still holding in that range. These are lines from before. Well, can it still hold them? That volatility, 18. Remember, if this stays low, okay, or even neutral, the path of least resistance most likely on equities is maybe grinding up higher. Now, I want to pull up a tool just real quick. We're going to go to the Market Watch. And one of the tools, since we have so many earnings this week, okay, is a tool called IV Plus Technicals. Now, the IV is the percentile, okay, and the T stands for technicals. I don't type that in because it would just widen out the column, and I want to use that column for other things. Now, if you say, look, I don't have this, let me send this to you just real quick. And first off, let me show you this right there. And as I do, I can do two things at once. Okay, now I sent to you that script. So first off, this IV percentile, it's looking at where the current IV is now in the last 1 year. Okay, what percentile are we? Okay, now if we take a look at this, the T for technicals, we're looking at the, it could be 3 up technicals or green, 3 red, 3 down technicals or red. Dark green, okay, tells us, well, by the way, let's go down. What types of technicals? Well, it uses a 30-day simple moving average. Second, it actually uses a MACD 8179, which you could change if you wanted to. There's the setting. We just type in the new numbers. If you don't want actually a 30-day moving average, we could take the SMA output in EMA and then type in, for example, the percent, whatever number of days you want. I have this to 30. MACD, I slowed down a little bit. And the MACD, you're going to see is the 8179. And you're going to see the stochastics is going to be a 14.5 setting. Okay. With 25 being oversold, 75 really being overbought, if you will, or hot. Okay. Hot demand at that point in time. So those are the 3 technicals we're talking about. So when you take a look at this, you're now going to see if I right click and say edit formula, the colors in the box, again, dark green, price above the moving average, MACD, and the stochastics, meaning the MACD is going up and stochastics. So if I look at one of these stocks in here that actually says which stock actually has a green background, well, dark green that is. The dark green, price above the moving average, MACD and stochastics. The stochastics it's using or it's showing is the slow, okay? So that's actually one that has historically what we would call 3 green arrows. Price above the moving average, MACD stochastics pointed up. Now, the lighter green, if we looked at something like PG, it's saying it's been up for the last 1 to 3 days. Gray, it's in the middle. It's only 1 or 2 days. Light, which is like Johnson & Johnson. Light red, price below for 1 to 3 days. And if we actually get something where it's dark red, like Merck, well, you've been below the moving average for more than 3 days. Is there any questions on that? Okay. So that should be pretty not bad, right? So it's just trying to help you time trading with technical indicators. Well, when you talk about trading, the different color scheme is trying to help you with the timing of that. Now, speaking of timing, sometimes what people want is they might say, look, James, I'm going to use the technicals as to kind of see what type of trend I have, MACD, the momentum, and the sentiment, the stochastics. But I also might want to add kind of a component of volatility. Okay, now, volatility, well, that's actually getting to what's the number in the box. Well, the number in the box is the IV percentile, okay? So if I gave a percentile like 50%, well, it's saying that half of the data set or half of the data set is below that number, half the data set is above, okay? Now, if we said we're at the 99th percentile, there's 1% of the data that is above where we are, 1% of the data. If we're at the 100th percentile, there's no data above where we are now. And if I said 0 or 1, I'll just say 0. There is no data lower than where we are now. Okay? Remember I said to you before, investing is about math and psychology. Okay? Now, one of the examples I want to pull up just real quick is NVIDIA. Now, this class, trading technical indicators. Technical indicators could actually be price and volume. Well, we just kind of already made mention of the moving average, MACD stochastics. We talked about that. Second, what's the number in the box mean? 52%, which means 48% of the data is above us, 52% of the data below. Okay? Now, what I'm going to do is it doesn't have to be at the high of the high of the high. Now, just as I do this just real quick, since I'm here, when we look at the 1 week percent, what's the point of that again? We're looking for bull flag pulls. The stocks that have the highest percent, those are probably the ones that have a great chance, good chance of flagging and maybe trying to run up again. That's why you look at the 1%, okay? The 1 week, excuse me. We're looking for bull flag pulls. 1 month, we're starting to see more of a trend now, okay? The stocks with the higher percent, they've been trending, and the question is, could they continue to trend? When you look at the year to date, that doesn't help. It's the first day of the year. But if you kind of said, look, what has it really done for the year? Okay, so far, given that there's a certain amount of time, people like to look at the year to date. They're right there, okay? Now, let's pull this up just real quick. When you look at NVIDIA, okay, we're going to go to the trade tab. Now, did anyone notice anything unusual on NVIDIA before I pull up the trade tab? Now, last week, we actually went into this, and we cannot say stuff like, well, yeah, and you didn't talk about this. No, that's not true, okay? Now, last week, we talked about 5 main dip entry setups. Know these, capitalize, okay? And so we talked about some examples, okay, of things that I think I missed, which you might be too. Now, if I went back to this just real quick, what you're now going to see is over the last couple of weeks, we've been seeing this 1 day down, close above the high of the low day. Close above the high of the low day. Well, actually, excuse me, that's a down day, close higher gap, 3 day, but also by the end of the day, it was close higher, close above the high of the low day. That day right there, not quite, okay? Not an entry right there, unless you're buying off price. If you actually look at that right there, that would be pretty much your bullish engulfing, close above the high to low day. The purpose of the color changes of the moving averages is to help you with timing. So if that goes, the short-term moving average goes from red to green, it's telling you what? The momentum is coming back in. What's the purpose of actually that green dot? Doink. It's actually to tell you that we just had a brand new close above the high of the low day. Today's gap up in the price, we went over that last week. A lot of times you'll see things gap. That's not guaranteeing that it's actually going to go up higher, but there were people lined up to buy, punching the price higher. Now, the other thing I want to kind of bring out, since we're looking at the MACD, does anyone notice kind of the MACD, anything unusual? What we've said over and over, and I said you need to watch this, if the MACD goes down, but it stays above the zero, if it stays above the zero, you're actually holding momentum, okay? You could kind of think of this when the MACD actually goes up like this, up, 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 that's your pull, right? When you actually see the stock actually kind of go sideways, that can actually just be the MACD cooling off. And it should cool off because the price is consolidating. Does that mean the trend is over? No, it doesn't, okay? It just means the price is consolidating so far. Now, or flagging. Now, if you actually get to where the MACD does not go below zero, and then all of a sudden it goes doink, and the very next day it goes doink, doink again, okay? That's your classic, letting you know that this is probably a flag setup, okay? Now, I want to go back to something just real quick. Let's go back, clear all drawings, pull this back up. Let's go back to Market Watch. Is NVIDIA in that, I want to pull something up. Now, when you look at NVIDIA on the row here, NVIDIA, and I'm going to kind of take this off so I can point to it, okay? NVIDIA, if we look at that row right there, trend 3, prices above both moving averages. The relative strength over the last 5 days, okay, compared to the S&P has been one of the strongest, okay? We'll just call it been one of the strongest. So last 10, it's in it's on the 100th scale. You look at the 10, it's 100, 2100, 4200, 6300. But it's also showing us right here, it's a trade above the high low day or a hold. Kind of widen that column out if we wanted to, so you can see that. It is also a 20-day high here today. If we said how many stocks in the Dow are hitting a 20-day high, we could answer that in seconds. Only one. How many stocks in the Dow, in the Dow 30 are hitting 55-day highs? One. Is there, if we looked at NVIDIA, how many days has it been since the moving average turned green? 2 days. If we look at how many days has the whole moving average been green? 17. So what does that tell us? If we see something where we've been up for 17 days on that 20-period moving average, there's been some type of trend, okay? If we see the short-term moving average just that is only 2 days, well, that's your classic flag where pull back and it just started to turn up. And when we look at the continuing, that's the continuing yesterday breakout. Today, Monday, so yesterday was Friday. This is how you use those tools. And here's what the nice thing is. Man, these tools, this is like your screwdriver, your hammer, your drill, your cordless drill, okay? The nice thing about these tools that you use over and over, 10 years, we're not going to say scrap all this, we're going to do something different. Because this is the basis, okay? Now, I want to also go back to just real quick. So when you look at the price, you see that when we look at, let's say, that NVIDIA, you're now going to see that when you look at that, we've been in this longer-term consolidation, okay? Now, the one thing I want to kind of bring up just real quick is when you look at this kind of pattern, long-term basing, you can actually kind of see this just real quick on the 3-year weekly. That's what it looks like, right? Long base. Well, now we just broke above, okay? Now, this is where it's going to be fun. Now someone's going to say it's an all-time high, okay? Well, is that a good or a bad thing, okay? Well, I mean, let's say someone's bank account's at all-time high. Is that a bad thing? If the marriage hits a high point, is that a bad thing? No, I don't think so, okay? It just means, hey, it's rocking right now. Now we're thinking, if you make that high, could that trend continue? Now what I'm going to do is, if I go back to the trade tab, okay, and remember, if you go back and look at this, there's the big push right there. See the red candle? Remember when we talked about the S1, S2 last week? Notice we didn't pull back down to there. How do you read that? If you don't pull back down to the S1 on the big green candle, what's likely to happen? Could go higher. Why didn't it pull back? Because people bought on the shallower dip. So when the prices pull back, we need to stop thinking that, oh, I wanted to pull back down to here. That's what you want. But other people might not want the same thing you want or I want, right? So now if we go to the trade tab, what was pretty evident right off the bat here today is volume. Well, let's just use the word, it poked to the upside. Remember about 2 weeks ago, about 10 days ago, we talked about open interest, okay? Number of contracts that are open and unexercised. We look at the vol. Now, remember, that's the volume is today, right? The volume is today. People, let's say someone bought, if example given, if someone bought 3,000 contracts and then sold 3,786 contracts, they're not netted off. The volume is looking at activity. Buys, sells, they both count for one, okay? The higher the number of contracts that are being bought and or sold. Now, one thing we'll actually notice that was pretty easy to see, my gosh, you got a five-fold right there. You got a 10-fold, about a 15-fold right there. You got a 10 multiple right there, 12, 2 times, 7 times, and so on. Another 2, 3 times there. But notice what we're seeing right here. It's on the April with only 2 days left, May with 4 days left. I mean, it's not just in one expiration. It's dadgum almost down the whole entire stinking page, okay? Now, if you miss this here today, it's making me a little worried. I'm not usually a worried person, but it makes me worried that you're looking at too big a list. And if you're not looking at the same stocks on a daily basis, you might consider actually making the list smaller, okay? And make sure that you're crystal clear on what you're looking at. May expiration, the same thing, okay? And you come down to the monthly options, pretty high as well, okay? Now, trade number one here today, okay? Now, notice what do we just go over? I explained to you these columns, right? Week percent, what's the purpose? What's the percent? What's the purpose of the monthly? What's the purpose of the year to date? What is the IV percent and why does someone care, especially in and around earnings? Now, if I went to, let's say, the market watch, if I went to the market watch to the trade tab, I'm going to go down to the Junes for just a moment. Now, why are you going to the Junes? Well, per how we started the year, we said if we're going to enter a new position, we want more than 20 days to expiration. We tend to focus on the monthly options first because that's where we tend to see more liquidity. Is that always? Not always, of course, okay, but that probably more often than not, that's probably true, okay? Now, in this example, what I'm going to do is I'm going to try to go out something a little bit further. Now, I'm going to keep the Mays open, so if you said, James, I don't subscribe to what you just said, show me those Mays. I'll leave those there so you can feel good as well, okay? Now, for some people that like to go a little bit further out, I'm just trying to make everyone happy, okay? It's hard to do, okay? I have 4 kids. I know all about it. Now, if we take a look at this, where's the volume? The volume is really in that 18 days. That's what we're seeing, the volume. We've seen some volume here, decent, but it really looks like that volume, it kind of stops right there. And if you look at, let's say, on the put side, you know, I mean, that's decent, okay? That one's 50% of the open interest. That one's about 20%. That's 10%. It really, it's not all over the strikes like we are in the short term. So it appears that there's some people thinking, they're speculating, which is not a 4-letter word, check it up in the dictionary. What you're now going to notice is the open interest right here on the 212, that's 10 times what the open interest is, okay? Now, it would have been nice if we could get some of that volume to come down on the table. If we were going to do the Junes, and I'm going to show that, and I'll show the May as well. So I'm going to try to make everyone happy here today. I'm going to try, okay? Now what I'm going to do is I'm going to come down here to the 210, right-click on that, and let's say the investor said, well, James, this is risky because we got earnings. Do we got earnings? I don't see earnings. The earnings, what we actually had was, and that was on the 4 hours. So we had that the earnings is on the date of the 20th. Okay. The 20th. Now, if we pull this up, so we got about 3 weeks. And remember, we always kind of said 3 to 4 weeks prior to earnings. That's when you tend to see some moves. So here we are. Now, what I'm going to do is I'm going to right click on the 210. Okay. Right click on the 210, sell. And what I'm going to do in this case is I'm going to go to vertical. Now, I got to do that in the paper money account. So let me put that right there. And I'm going to do the 210. Okay. And the 205. Okay. Now, I went over it quite a bit. Why does someone pick the different strikes, right? And let's say we're going to do a standard kind of more $5 wide strike. Good thing about this is there's a built-in max loss. The bad part about this, there's also a built-in max gain. So this is where a stock investor might say, I don't want to cap myself at $175. Example given today, if I had 100 shares of the stock and it was up $590, I could have been up $590. This is the bad part. I'm telling you. Okay. Now, if the investor knows that and they say, I don't have $100 worth, 100 shares. I can't buy 100 shares. I don't have that much capital. Okay. I'm just showing both sides, right? Now, what I'm going to do in this case is we're going to show this, go confirm and send. But I'm also going to go down to the Junes. And what I'm going to do on those Junes, what I'm going to do there, let's go back to that table that we had. And we looked at the Junes, which it was also the, so I did the Mays, but I'm also going to go down to the June 210s. So that June 210 right there, bid-ask spread is 15 cents wide, kind of more in line with what we'd normally like to see. The bid-ask spread there, credit is a little bit bigger because you got more time. We pull this up. And you're now going to see there's the commission built in. So we're going to kind of show a little compare and contrast. Going to choose a May expiration, and we're also going to choose a June expiration. Slightly more credit for the June. You kind of expect that to some degree. Volatility for the June, if we pull that up and we kind of say, is it so much less? Not really. 45 there and 47 there. Okay. Now, quick pop quiz. If we said, hey, is there a stock that is in the Dow that also has, or I should say it like this, name the top 3 stocks that have the highest IV that is going into earnings? How long would it take? Wouldn't take very long. Okay. Now, if we look at this, what has 100? So that means of all the data that we actually have over the last year, we don't have an IV data point higher than where it is right now. Microsoft is also there as well. Now, the one thing is you do not have the type of trend that we've actually had with, let's say, some of these other stocks. But I'm going to show this kind of from more of a conservative standpoint. Now, many of these actually tech companies, they've been doing reduction of headcount, right? That also might be kind of language of we're watching our bottom line. We're trying to optimize, strategize the business so that way we could actually be on the right side of technology and benefit from technology changes. Now, given that when we actually look at the trade tab, let me kind of show you another way you could actually look at this. If we look at that implied volatility, okay, and we pull this up, remember I said we are at the 100%. Remember I said that there is no data over the last year that shows that we're higher than where we are right now? Well, we can now look at that over time and see that's true. Where we are right now on implied volatility is the highest. And if it's the highest, it'd be at the 100th percent. If we were at the lowest, we'd be at 0. Okay? So we're trying to see where are we in that range. Now, when that volatility is high, someone might say, hey, look, I'm trying to actually sell something. Not just trying to trade bullish or bearish direction. I'm trying to actually get a higher premium to play maybe a certain direction. Now, in this case, what I'm going to do, trade number 2, is now remember, I'm just using that one script, okay? When we pulled up that script before, when we actually said that Microsoft and what type of technicals do we have with that? Do we have 3 greens on that? Well, let's pull it up. Microsoft IV percent, we pull that up. It is 3 greens, but it's in the very short term. Now, the one thing we would say is on that trend weekly, it is trend 2. So it is some longer term trend change, thank heavens. It's not trend 3, which means it could be a little early on the weekly chart. 4 actually on that trend daily says we are at the point of consolidation. Okay. And that makes sense because when you pull up the chart, we're kind of at the old resistance, new potential support. Now, if we pull this up, trade number 2, we're going to come back to the Microsoft. And what I'm going to do actually on Microsoft is we're going to look at, let's say, and I'm going to go a little bit farther out. Now, the con about this, or at least I'm going to look at it, well, if we look at the Mays, which we know that there's earnings coming up, there's the implied volatility, 47%. If you say, I'm going to go to the Junes, well, 37%. So if the stock goes to your earnings, you're going to typically get the volatility to compress. If the volatility actually goes down, the option premium goes down. Okay? Now, you're trying to sell high, buy low if you're selling something. Now, again, we would normally like to go farther out, but if we see 10% difference from the May monthly to the June, someone might choose the Mays. So here's the thing. We got to think, right? So we could have a rule set of what we normally like to do, but when we actually look at it, we need to analyze what's actually happening and saying, geez, I know I'd like to go to June, but that's a pretty big difference, okay? 10%? And if your goal is you're trying to get volatility to go down, well, they might pick that option that doesn't have 20 days, but 18. So if you're going to go less per your rule set, you have to understand why are you doing that, okay? Now, in this case, what I'm now going to look at is we're going to try to go a little bit further down. Same thing. If we actually said, hey, we normally like to have a delta of 30 to 40. Well, you got there. It's a 40-cent wide in the bid-ask spread, about 45 cents, 40 cents, 35 cents, 40 cents, and so on. If we said right here which one has the volume in the open interest, the one that actually, and so this is bringing up the point, just thinking that you could just hinge or lock onto one thing, you got to be careful with that, okay? You're investing, okay? You're looking at different components. We looked at the delta to see what the strike would be and how that affected the bid-ask spread, but when I look at that second thing, or third, because we talk about volatility, which strike actually has that volume and or open interest? Liquidity. That's the 410. Now, what I'm going to do in this is we're going to sell the 410 and then buy the 405. Sell vertical, trade number 2. We're going to sell the 410, buy the 405. Okay? Now, you're going to see also there's the credit given the vertical. Take 175 divided by 325. Okay? And how do we come to this trade? We got that script. I shared it with you. And you're going to see that the ROR, given the monthly May expiration, is 53. Okay. All right. Now, just real quick, any questions with that? Now, the comment from James L says, how many people do option trades over the earnings? This kind of might be maybe a point of actually maybe sometimes doing options over earnings. That way you could define the risk where there's not a stop. Okay, that's kind of a big point. Now, what I'm going to do is going to go ahead and send the order. Okay, send and fills. Now, what I want to do is just want to show you something just real quick that you're just so you know that it's there. If you go to this page right here, okay, and people ask me about this, and I'm like, hey, I'm going to show the resource again. When you go to my X page, right at the very top, and I'll even give you this literal page to the photo, okay? If I look at this right here, weak percent, okay? The purpose of that is momentum. That first section says the column heading, weak percent. What's the purpose? Momentum. What's the script code? In blue, okay? If I said 1 month percent, that's the column heading. What's the purpose of it? To see the trend. What's the script code? There. So you're going to notice that whenever there's kind of that little vertical line, that's column heading. Next, in that next one, trend. That's the purpose. In blue, script code. That's how you read that. So if you said, well, what's the purpose of actually looking at, let's say, the implied volatility? We're trying to look at that 30 to 40 days out. I wrote that you do not need a code for that because that's just the standard implied volatility. Now, if you're using the one we talked about, IV plus T, implied volatility plus technicals, MA the moving average, MACD and stochastics, and we just talked about that, and then there's the code. All right, so if you haven't used that, my gosh, grab it, okay? Now, that took us some time to create that for the, just at least go out and grab that. Okay, now, I want to also go back to just real quick, another example that we're seeing real quick, and I want to kind of show a couple stocks. So first off, when you also look at the stock Amazon, we talked about that, and I posted about that last week, talked about how that stock was kind of going to the top of the band on the moving average envelopes. We are still at the top of the band, and you're seeing that continue to push a little bit. Now, the one I also want to bring up just real quick that is doing something similar to do it, and we didn't do the trade this morning because we wait till the class goes. Now, what you're now going to notice is on 4/29 in 2 days, Google has earnings. Okay, now we said on Friday on the ETF class that sometimes when stocks have earnings, some people might say, I might do less stock investing, perhaps, and maybe just buy a group of stocks. Okay, that's an option, okay, if they considered it. Second, if they actually said, look, there's a lot of stocks have earnings, I'd like to invest or whatever, what's another option? Well, let's say the investor said, look, I want to go bullish here, but I want to be a little careful, right? Wonder if it goes down, okay? Well, now what I'm going to do is, step number one is we're going to try to come in here and buy now here's the deal. It's a $352 stock. In the paper money portfolios I have, we have a $45,000 account. We also have a $162,000 account. If I bought 100 shares in that margin account, it's a whole account. So people ask, well, why do you do more option trades? So I try to make this as relatable as possible. It's hard to buy 100 shares of stock in a $45,000 account. Now, the strategy that I want to show, if I can, is now the closest thing I could get to it, but it's still too big, is if I bought 100 shares, let's say, in the IRA, it's still going to be 30% of the account. That is above and beyond what we can do. So with these bigger dollar stocks, we could say, geez, if I had the money, and I could, the investor might say, look, I might do a collar, buy the shares, collect the credit to the upside, and then use that to protect to the downside. Try to collar it. Now, if maybe the investor says, I can't do that. Well, now let's come back just real quick to the trade tab, and let's go back to just real quick Google, okay? Now, you got to remember something is we are in a market that is at all-time highs. What does that mean? Many stocks might be at all-time highs. If those stocks are at brand new highs, some of those, stock prices are more expensive. So the group of stocks that we talk about on Friday and Rachel talks about on Monday afternoon. And so you got to understand is some people might say, well, I'd like to invest, but how do I ride the trend or something like that? Well, this is where it gets into the options. Now, you can choose what you want. I'm just showing you there's reasons why people pick different strategies. Now, what I'm going to do on this is I'm going to go to Google and I just want to take a quick peek. Is there anything on here like we saw on NVIDIA? And I'm going to ask you this. And why are we bringing this up? Because we saw it this morning, okay? Now, if you take a look at this, is there any above average volume? Now, notice I have not said stock volume, okay? I'll show that stock volume in just a moment. When we look at, let's say, the ones that the expiration today, yeah, quite a bit of activity. When I look at the ones that are in 4 days, Friday, pretty decent activity. Go out a week from now, next Monday expiration, decent on a couple of them. Go out 9 days, not as much for the most part. You look at 11 days, not bad. Couple of them getting a little move. Okay. Look at the Mays. There are a couple here that have decent, the 350, that one right there, the 360, that one right there, the 365. We come over to the put side. That's a 1,445 contracts and 138. You got 234 on 761. If we go look at the volume on the stock price, and by the way, a lot of people have pushed back on what I say on volume, but if you look at a lot of stocks that go up, a lot of them just kind of have 80% of the average volume. Okay. And if you look at, let's say, Google, you're going to remember that the volume here that we're looking at is 50 days. That average volume will be tainted if there has been a recent sell-off. Okay. So that what it means is when that stock goes back up, the average volume line is going to be higher. Why? Because you're comparing buying volume to selling volume. Okay. So traders that have experience, proven, they're going to say that, hey, that volume is probably going to be lower than that yellow line. Why? Because that line was pushed up when the price fell down. As things go down and down and down, they sell and they panic and they sell and they panic and they say, get me out of that thing. And they don't smash the button a little bit. They say, get me out of there. And they capitulate. When people come back in, it's just kind of more, they're just, hey, I'm going to take a little entry on here. I'm going to take a little entry on here, take a little entry. They're just nibbling on that trend, okay? Now, example number three, excuse me, we're going to come back to the trade. Now, notice we're looking at price, volume, the stock volume, and the option volume, okay? Now, when I pull this up, I'm going to try to go a little bit further out. When I say a little bit further out, the May monthly expiration. James, you didn't show the Junes. If we do go to the Junes, there are some here that is kind of a little bit better than what we saw in NVIDIA. Like what? Like that one. Like this one. Okay? Like that one. Those are better. I'm looking at what's the volume compared to the open interest. The higher the percent, the more demand, buying or selling, okay? Now, we're going to try to give this one a little bit more time, okay? There, I'm going to come over here to the put side, and what you've got a bid-ask spread there of 20 cents. I'm going to right-click on that, and what I'm going to do is sell, and we're going to go to the 335. So in that margin account, what I'm going to do is when I pull up that Google to the May, we're going to go 345 and then try to sell the 335. Now, that sounds good until we double check it. If we do this $10 wide spread, confirm and send, we look at this and say, hey, can we take that type of risk? Well, we can't. So I'm probably going to have to go look at the 345, 350. But just to save us time, could we look to go do that risk in the IRA? Yeah. In the IRA, we pull that up. That can take a risk of 323. So I'm just changing what type of account I'm in, and we can take that risk. Notice the commission. Notice the break even. This is at expiration. Max loss built into the trade. Send the order. Okay. Now the takeaway from today that I want to kind of just mention before I go to questions is, number one is, I think a lot of investors, they might not really be understanding what that IV plus technicals is showing them. Remember, the colors in the box is the timing of the technicals. The number in the box is the reference to where the implied volatility is now to the data set of time. Okay. As we saw in Microsoft in trade number 2, we were at the 100th percentile, which means there's no data point in the last year that's higher than where we are now. Now, that doesn't guarantee that it's going to work, but you know what we say each time we have a class, we're about ready to find out, okay? Now, what I want to do just real quick is any other stocks that stand out. Super quick, if we look at this, a couple stocks that I want to kind of make mention of. Kind of some unusual activity on Goldman Sachs. Keep an eye on that. Another stock that was kind of up there with higher implied volatility was Kitty Cat Meow. Okay, we're seeing that kind of get into the earnings. The other one we made mention of last week that we might keep an eye on. Why is it not falling down? Well, United Healthcare, big pop to the upside. Keep an eye on this. The longer we stay at the resistance, the greater the chance potentially we might try to actually go up higher. And the last one I'm just going to mention because Dean mentioned it is Micron. We talked about that last week. Boy, it's been a nice little grinder to the upside. And if we pull up the volume on this, this is going to blow people's minds if this does not have volume. Okay. Oh, look at it again. Okay. So what you're going to notice is the majority of the last 10 days, there's only been 2 occurrences where the volume has been higher than normal. That line right there is a 50-day line. Okay. So per what I said, and I say it from experience, you know, you're going to get 80% of the average. And the average is a bloated number because you're comparing buying to selling. Okay. All right. I'm out of my time here today. Go out and practice. I think there's many examples that actually have not only price, but volume. Now, remember with what we talked about, it was done for example, illustrative purposes only. We got Barbara coming up next on covered calls and short puts. Thanks to Rachel. Okay. Representing South Carolina. And thanks to all of you. I'll be in throughout the week. And remember with what we talked about, it was done for example in illustrative purposes only. And this is the class on trading with technical indicators with a focus on price and volume and implied volatility, given that this is the big week of earnings. Have a great day. Take care. Bye-bye.